Good morning, everybody. Welcome to the new week. Welcome to Monday, and welcome to Kate and Stel. How you doing, guys?
Hey Ryan, hi Stelios, hi everybody. Yeah, we're doing good. Nice
Yeah, I
air
think.
show in Bournemouth over the weekend. Impressive.
Yeah, very good to see the air show. See that typhoon flying around was good as well.
Yeah,
Very noisy. Hope you enjoyed yourself, mate. We had a couple of beers on the beach and a few after. I'm still
very,
suffering.
very nice.
We finished about 3:45 Sunday morning.
Oh, you
Yeah,
guys are animals, right?
the
I'm
party
getting
kept
older.
going.
I can't stand all of that anymore.
Getting too old, mate. Getting too old. I think Stel is trying to join.
Morning,
Oh, there
chaps.
he is.
There
How you
he
doing,
is.
mate? All right?
Hello. Good. Thank you. And you?
Yeah, not too bad. Not too bad. Had fun this weekend?
Yeah. We had a party actually for my wife's birthday, our wedding anniversary, my birthday as well, which was a few weeks ago, but it was fun. Steve couldn't make it.
No, no. I
No.
saw pictures of him. He had better things to do, didn't he? Filming his.
Yeah. It's okay. We pick our battles, don't we?
Yeah, exactly.
How
Exactly.
you chaps? You okay? Both of you?
Yeah, we're okay. I said to Kay just now, I'm still recovering from our little party Saturday night. Finished up 3:45
Oh,
Sunday morning.
nice. Nice.
Yeah, it was nice to see the big man and share a few beers with him.
Yeah, very nice.
Yeah, it was great. Yeah.
So then,
Now we have to pay a bigger energy bill because over the 4 days those planes they burned a couple of gallons of fuel.
yeah, more than a couple of gallons, a couple of
Wow.
oil fields, I think, especially that typhoon roaring around. I'll drop some of the footage in the chat room a bit later. Anyway, let's get stuck into it. Not seeing any comments. You seen any comments in the chat, Kay? I'm not seeing any in there. Is that working?
No comments. Just good mornings from a few people.
Ah, there they are.
Yeah.
Okay, gotcha. I'd like to know you guys are in the room. So right, let's kick on. This is going to be the start of a very big September. It's the end of summer, pretty much, for a lot of countries. US is on bank holiday today, but as far as the rest of the world goes, governments returning from their recesses, etc. Today we get the UK Labour, UK Conservative leadership result, deciding the next PM. That's going to happen round about 11:30 GMT, 12:30 London. We get to find out who's going to be in the hot seat as the next PM. Just on that, it's looking potentially like the market reaction might be a bit muted, just in case any of you are wondering. I've been doing some asking about some of the people in the market, what they're expecting from this, and no one's really expecting anything massive from it. It's been well known that Liz Truss has been the favourite throughout this, so it might be a bit of a shock if Rishi Sunak does win it. I was expecting some sort of leak over the weekend on the result. It's possible that's come via the bookmakers, because one of the people I speak to on Twitter, he said the odds went from Liz Truss being 20-1 on. That means for every £20 you put down, you get one back. And that jumped to 100-1 on, which meant every £100 you put on, you get one back.
Surely you take the other side of that, surely, right? At those odds, or not?
Yeah, well, the value is obviously on Sunak, but it indicates that there was potentially some big betting as soon as polls closed, or at some point over the weekend for those odds to really shorten a great deal. So maybe some last minute betting going on there. There was also, I want to point out, in the options, there was 684 million expiring today at 114.75, and they were all puts, and they were all put on last Thursday and Friday. So I just look. I don't know the significance of the number. Maybe just keeping it below the big figure. It may not be related to the leadership contest. But these were last minute trades put on Thursday and Friday for the tune of 684 million. That may be something to do with the leadership contest. I may be 2 and 2 plus 5, 2 and plus 2 equals 5, but it just stuck out a bit when I was looking at the options last night. And just for those who are not in our chat room or on the Forex Analytics platform, we do have a full list of the options expiries, and I do report every weekend usually on a Sunday night. I'm at my desk already and just plotting together what the options market looks like, or the expiries look like over the week ahead, and I'll just pop that in for you so you can see that. So there you can see the cable ones I was talking about, 140.70. They're actually at 75, but these are done in 10 pip increments. And there you can see some of the information we put up showing you where the large expiries are over the week. We can see, you know, are they above, below market, where the clusters are. Gives us an idea where the busiest days are. Are they around big events? Obviously, the ECB coming up. We see some big expiries potentially coming in around there. The total strikes or values of the strikes over the week. So it shows us again where the bigger strikes are coming up this week. And it potentially tells us, you know, which way the market's leaning. As you can see, a lot of calls above market, none below. Puts are been a bit more spread out in euro dollar there. So these are calls in the blue, puts in the purple. So just to show that, if you want to obviously come and do that, please come and join the Forex Analytics platform. You'll get all that information there, as well as some market orders each morning. These are orders, FX orders in the market. Anyway, so let's get on to some of the other headlines. There's been quite a bit out this morning. From Friday, what we've got is this overspill of the news regarding Nord Stream not coming back online. Apparently, Russia found some technical issues and a gas leak, and therefore would not be reopening Nord Stream and this particular turbine that they had for maintenance. We got comments out from Siemens, who usually do all these repairs and are in charge of the parts and pieces, saying that in normal circumstances there's no need to shut down the turbine to make this make these fixes, and that they can be running all the way through. Now the Kremlin was also out this morning adding to that, saying that the gas transportation problems arose because of sanctions introduced by Western countries. So a bit of Pinocchio going on there from them. They're saying that sanctions are causing chaos for technical support, and we can only hope it's possible to fix the turbine. Make of that what you will. But this has all been feeding in late on Friday and obviously over the weekend and this morning. Now, as you can see there, we did get a break of 99 in euro dollar overnight, or early this morning rather. We had a little gap open down based on that news. I think that's more of a timing thing, because this news dropped pretty late on Friday evening, would have been in UK, Europe, and so maybe some of the market was not around to trade on that. I actually dropped a sell stop in at 99.80 last night because I thought this news might weigh when we opened up this morning. It did. We broke 99, triggered my stop at 99.80. I managed to get 3 pips in the green before it all reversed, and I got stopped out at 99.20. Such is life. But I had a feeling we were going to be breaking 99 overnight. It just didn't follow through. So we need to see what that does from there. But we'll talk about the pricing more fully in a moment. We've also had some news out of Germany. They're going to pick 65 billion off the magic money tree to help with energy costs. They're going to be paying for that partly by imposing a windfall tax on energy companies. So, you know, all of a sudden Germany are now just throwing the money around like there's no tomorrow, ever frugal Germany. Now we've also had some news out of China and the PBOC. We got some comments this morning from the Deputy Governor saying, don't bet on one-way yuan moves. So a little bit of a warning there that came out. They said they will step up support for the economy, but it won't be flood-like stimulus. And then pretty much 3/4 an hour later or whatever, they cut the FX reserve requirement ratio by 200 pips to 6%. So much for flood-like stimulus. Now, you may have seen that coming out on the wires, this FX RRR cut. It's not the main RRR cut. The main one is for overall liquidity held at banks. This is just the FX portion of that. So it's, in terms of importance, it's probably one rung down the ladder compared to a full reserve requirement ratio cut. And that distinction needs to be made, because, you know, you can see the headlines and think it's the big one, but it's not the big one. Even so, we have seen a reaction in one, and you know, it's tipped off from the highs up here, had a little spike down near 60 at 93.50. We've already seen a bounce, but it's looking a bit soggy again. Another interesting development is that they fixed it once again below 6.9 at 6.8998. So 2 pips below. It was expected to be fixed at 6.9153. This is all the while we've seen it move up in the offshore one to 6.95, and the onshore one is also sailing up high as well, above 6.90. So even though they fixed it down, we need to watch tonight's fix. Are they going to shift it up, or are they going to give the market a little bit of another kick in the teeth by fixing it down below 6.90? We'll have to see what that comes. That will be a strong signal. But anyway, they're going with the stimulus as we expected. Be ready for a full RRR cut to potentially come at some point, but also continued comments that they're not going to let one weakness get out of control. So it could be still that a steady move up is coming. Kay, Stel, you got any thoughts on this China stuff coming out?
Yeah, I mean, this FX requirement cut is really also done trying to put a brake on the speed of the yuan weakening. But it may have an inverse effect as well. When the reserves come down, it also can mean a lack of stability going down the road. So I think the market reacted straight away to the actual fact, and then on a second thought said, like, nah, I mean, it's still we're still not ready to reverse this yuan slipping and sliding. I'm still of the view we are going to see 7 anytime in the relatively near future, I think, because now we're like less than 1% away, right?
Yeah, and that's quite a big jump there, sort of gap open, quite significant, as you can see there in the CNY. CNH was already has already been ticking up there anyway, so no shock to see a move up there. But I think I agree with you. It's going to be potentially hard to get a decent dip in this to jump in on. You still holding some, aren't you?
Yeah, I am. I'm regularly like letting some go, and then when we see a bigger dip, buy some back, trading it around a bit. They're still firmly easing, right? I mean, in the global scheme of things, they are easing. They are trying to pour money into the economy, and they are at the same time wrestling with COVID and manufacturing holds here and there. So I don't think we are ready to reverse the yuan yet. Not only for my book, of course, but I'd like to see it trade at 7 to see what the reaction will be from the PBOC and the officials. Just to see, to get a judge whether they are happy for it to be there, or really getting unhappy and try to smack it back down to 680s or 670s or so.
Yeah, and we got that big old level up at 7.2. Should we get up there, probably going to find a decent amount of sellers, maybe us included, if we get up that high. But we shall see, as Kay says. Right, have you guys got any other headlines you want to share? Because I've not got an awful much of main importance coming up.
There was one little line, but it's not an official. Okay, it's the Keidan Ren is the official, the biggest Japanese lobby saying that, let me just find it back quickly. What it says, so the business lobby, Keidan Ren chairman, said that the current depreciation of the yen is driven mainly by speculative moves. I think he's not an official, right? But he's not part of the MOF, but it's the biggest business lobby. So I think it's in a move of trying to force the hand a little bit, to force the MOF hand a little bit to call for a red line in the yen depreciation. So this is one we need to keep a bit of an eye on in case they take the speculative lines back up in their comments regarding the yen moves. But I mean, for the rest, I haven't really seen much real news. There's a lot of opinions about what should be going on and what not. But and today is U.S. and Canadian Labor Day as well, so it's going to be people are on a long weekend. It should quiet down a bit, if not get less liquidity in the markets. I'm thinking about sterling in particular, if the market wishes to react on the new PM news. And yeah, I mean, Sunak would now be the surprise trade, probably send sterling a bit higher because he's less of a big spender than Truss was saying that she would. So yeah, keep an eye on this on those sterling moves mainly for the afternoon.
Yeah, I mean, I think we might have. Usually on a holiday, especially when the US is shut and we lose that liquidity, it can be quiet. But as this is a pretty much getting into a full return of markets, people coming off the summer holidays, we do have these big risk headlines floating around. It can cause the opposite, and we get some high volatility moves, on headlines and stuff, and they move perhaps more than what they would if there was a full liquidity here. So just be careful on the risk headlines. That we could be a bit more volatile for pricing that we've seen before. Just have a quick overlook at the economic data that we've seen this morning. Get rid of that. We don't want any of that rubbish. So it's PMI's day, services PMI's day today, and we've seen mixed numbers really. We've seen, got Japan dipping there into contraction, Australia dipping as well, but just staying above the magic number. It's been mixed in China as well. We've seen a move down, but it's still well in expansion, beating expectations. Then we come into Europe. Again, just seeing a little softness coming in as well. 52.9 was expected from Spain, came in at 50.6, again just above that magic 50 level, the expansion contraction level. Italy still in contraction, but a move higher there on the composite services. Again, a surprise move higher, expected to dip further into contraction, and then it's gone into expansion. So same for France in the composite, a bit higher in the main services there. Germany looking the worst at the moment, dipping further into contraction. The pan-European number there as well, also into contraction. UK coming out a fairly robust revision lower from the flash. The flash was 52.5, as you can see there, expected in unchanged, came in at 50.9. So a fair few countries there either hovering in expansion but close to going the other way, and indeed some going further into contraction. But it's looking a bit of a mixed picture on that there. Retail sales was also out a little worse than expected by a pip, but positive month on month. Year on year number worse than expected, but not as bad as the minus 3.2 we saw the month before. Now the big event coming up this week, just to have a look at the weekly calendar here, is obviously the ECB on Thursday. We do have the RBA tonight, or the early hours of tomorrow morning, depending on where you are. Tomorrow we've got the ISM Services Index, so that's potentially going to be big for US dollar and yields, as we've seen previously. Over the course of the week, we've got oh, there we go, Bank of Canada as well on Wednesday. So another central bank to go. We've got all those ramping up this month. No real, I don't think we've got any jobs data. Oh, Friday, Canadian jobs data. We usually get it at the same time as the NFPs, but not this month. So that's coming up on Friday. Too late for what we'll get out the BEOC announcement, but keep an eye on that anyway to match that off against what the Bank of Canada come out or announce on Wednesday. But we'll get into some of these central banks a bit later on this week on the Flow Show. Anything catching your eye there, guys?
I'm not saying much because I really don't have much to add. Just the data looking pretty poor actually out of Europe, and the euro as a result under pressure. Obviously, it's not just that; it's also the whole situation with the energy, and it's just a mess at the moment. But I was discussing with a friend of mine this morning. He says, what do you think about the euro? I said, well, it would be madness to sell it here. Obviously, if you've been short, it's been a good trade, but I wouldn't sell it down here. I wouldn't buy it, so I'm just leaving it alone. Because one positive headline and it's game over, or at least it's going to be a big jump. So I'm not touching it at the moment. But bottom line is the numbers. I mean, they're starting to look pretty bad, especially if you see Germany underperforming. That's usually a very, very bad sign. So but yeah, I don't have much else to add. I mean, it's been a pretty quiet day today, and not too much liquidity. Sorry?
You can head off back down the beach.
Yeah.
Kate, you got anything you want to add on anything that we've got coming up? Obviously, the ECB is a big one, which we can get into a little later in the week.
Yeah, just the RBA, because that's coming out overnight. So the expectations are for them doing another 50 and then perhaps signal a bit of a pause. So I've read both. That they would be, because doing another 50 BPs, that would take them into 2.35% for their main rate. It may still be a bit below the neutral. So I don't think they will be done unless they front load with a 75. And we have seen a couple of times when central banks do this bigger rate hike, but then clearly signaling that they do front loading, meaning that somewhere down the line they will slow down, that we have like one effect on the announcement and then the counter effect a few hours later. So be a bit careful with the Aussie to just buy or sell the headline. It may fire back after a few hours. So I'm going to let this one go by. I don't have anything in the Aussie. I think it's a little how shall I say, there's not enough certainty in what's going around there for the currency, because are they looking at what the yuan is doing, or are they on their own program? It's debatable on both ends. So I'm going to leave that one alone. So that's for the immediate. And for the rest, I mean, the bond market is closed today in the States. We have seen though that those levels of 3.25% seem, we went a little bit above, but then seemingly there's a bit of bond buying going on at those levels in the US 10. So I'm keeping a close eye on that, especially for stuff that is directly correlated, such as dollar yen, for instance. I've managed my dollar yen a little bit, just waiting for what the US will do really with their bond market when they come back online. But for the rest, I mean, it's a bit of a wait and see for the timing.
Yeah, no problem, mate. I'm just seeing a headline out from Germany, a government spokesman, saying that the new energy relief package could exceed the previously announced 65 billion euros. So the money tree has obviously grown a few more branches to what I spoke about a few minutes ago, and now it could exceed 65 billion. So keep an eye on that there in terms of fiscal measures from Germany. Yeah, and back to the RBA. Quick thought on the RBA. We have obviously seen the RBNZ given an indication that they potentially going to stop hiking after the next couple of hikes, so get into their terminal rate, if you like, or at least a pause rate. And the same could be said, as Kay mentioned, of the RBA potentially signalling the same. I think the item to watch there is any comments on jobs. They've had 2 quarters now of negative jobs growth, and that may start to influence their decision making. So that could be one of the factors to keep an eye on there. Not that the market is really maybe going to react, because the RBNZ has sort of tipped the nod that there's going to be some central banks who can't hike forever in the large amounts they're doing. As Kay mentioned, it could be that they just slow down hikes rather than say we're doing 2 more and then we're done, or whatever. So just keep an eye on some of the factors that could be driving the RBA's decision there. Right, well, let's get stuck into it then and look at some of the pricings. As I mentioned, euro dollar, it's becoming very interesting. I mean, this is one of those times where the tech for me isn't as important for watching intraday price action. We've got this level at 99. Okay, we've come through a hawkish Fed, we've come through gas issues, this weekend, supply issues, and all the other negatives, bad data, all the other negatives that have been thrown at us over the last couple of weeks, and we still meaningfully can't break 99. Now, to me, someone who watches the price action, even this break today, couldn't follow through, couldn't hold it, got back above. Now we're holding above again. When you're looking at price action like this, it's telling you a story. It's saying we don't want to go below 99 yet. Doesn't mean we can't. And if we get a move under today, that break could be the one that sees us on another leg lower. But it's very telling that we can't get below this number and hold below this number for all the news being thrown at it. Now, in normal times, that to me would start signaling that we've potentially got even if it's a short-term bottom, a bottom that could then expand further. We get back above parity and maybe have another look up towards the 103.40s, the big level that we've all been looking at up there previously. But I still don't have a reason to buy the euro. Nothing has changed. Even though we're not going down, there's still no reason to say we should all be piling into longs. And that's a very, very strange situation, because as Stel said, you don't want to really sell it down here, but you have no conviction in buying it down here. So there's 2 ways you can look at this. And I mainly look from the longer term perspective. I don't want to be buying it for the longer term down here. I might play it off for the 99 level now that I've seen a little false break and it's holding again the support. Maybe try for a run up towards parity. Absolutely. Those are the sort of short-term trades, perhaps is what we should be looking at. But for the longer term, although it's looking solid down here, I still can't find a reason to buy it for the long term, except maybe in versus euro or versus sterling. So how do you guys play it, Kay and Stel, when you get this sort of price action? I mean, as I say, that all the technical indicators or whatever, don't really mean anything to me right now. For me, it's just watching that price action, watching what the price does around it. So how do you feel about it? Are you seeing signs of a proper bottom here, or is it still, we could go either way?
Yeah, I think Stel got cut off. Well, to me, yeah, as I've been saying, 99 is really the level where, to me, the battle for parity will be lost or won, but perhaps not on the first attempt. Also, with the US being off, I'm a bit cautious for what's really going on here. We've seen that open went weaker, very weak in during the Asian time zone. I've also seen the euro crosses getting a bit massacred again in the Asian time zone, and then as 8-9 o'clock struck in our morning, a wave of take profit, which which can also be, which is also normal, right? I mean, it's a big level. Well, I still can't buy a euro, but if the euro struggles versus the dollar to get lower, perhaps it's a case of being a bit short selective euro crosses instead of if the dollar doesn't really advance. And I think for today that may be the case. We've seen US yields a little lower again, and then well, we don't know what the bond market is going to do with it. So today may be a case of maybe a bit profit taking, dollar moving around a little bit listless, but seeing buyers on dips, and the euro perhaps a case of it's always looking the most offered at the bottom, but no, it's too early to buy euros. And if Germany spends more and more money, that it could put a little bit under the German yields again, but then on the other side it deteriorates their debt profile. So I'm still not a euro buyer right now unless we get all of a sudden good news. We've seen what is interesting though for us traders to note is the impact, because we said like, okay, I mean it could be that the euro is closing in on a bit of a bottom because all what's happening with the war in Ukraine and the problems with the gas imports and everything is already being declared. So we may argue that it's in the price, but I think something being in the price is only going to be seen when we get a real return higher. And for the time being, we can only speculate, and the return higher is just not happening. We see retracements of bigger moves, but the reversal is not happening at all. So personally, I think this is just a take profit round in the euro. A good example is the euro emerging markets, which set in a new low overnight, and then had a pretty strong rebound. Euromex, I'll show it on the Euromex, for instance.
Yeah.
And no, but to me, this is not a signal yet to buy euros. If it would be in a market where nothing really bad is happening, like a market which, okay, maybe not like the big expansion, but just muddling on, and things are doing all right. But no, this just still too much weight hanging around the euro neck from the geopolitical situation, in my opinion, to try and call for a bottom.
Yeah, and just to highlight this, and excuse my crude drawing skills there. We've got, pretty much you could probably say we've got three patterns here that are pretty much all the same. We could even take this one in the middle. Again, excuse the crudeness. So, these times when we've hit support, now these support areas have been big long-term areas. If I try and scroll back without losing everything, you can see these have come in at big areas historically. But the price action has been pretty much the same. We have the test, we have the bounce, then we have a bit of indecision. Maybe we break below, it's a false break, such and such. Then we get a big move down. The same happened here. Test, bounce, test, lesser bounce, and then we get the break. So we could be setting up for exactly the same sort of action in this third phase here. Now that would mean if we do get a break, we could be heading down to 95s at the very least. And sometimes, you don't need your technical analysis in terms of fibs or whatever. You just need to watch this sort of price action, because it historically can happen the same way over and over again. And you just got to sometimes learn the patterns. We've had a bounce, we've had a test of a level, we've had a bounce, it's come back. We're moving around it. It's not really confirmed the break yet. So you get an area, and 99 seems to be the number where that's going to determine whether we bounce much higher, or we shoot up there, or if we're going to break down and we're going to head down there somewhere. Let's see if I can just if you get my meaning with those crude drawings, it's all about, sometimes it just comes down to one single level. It came down to one single level at 103.40, came down to one single level at 108, 108.30. These are the times you've got to watch, and your indicators, your fibs, your extensions, whatever, you don't need them. Just look at one area and decide if we get a hold below 99, we are going lower, and it could be significantly lower. And that's the easy way to look at trading on the simplest terms available there. Kay, do you want to take the screen while I get the mop to my chart and get rid of all that mess? Are you there, mate?
Yep. Oh, sorry, I forgot to unmute my mic. The first one I want to show today is going to be oil, because I forgot to mention it. We do have an OPEC Plus meeting going on today, and there's a bit of comments floating around that they may discuss a bit of a cut. The Russians are obviously against it. But the main idea or the main expectation is that they will keep the program running like is right now. But we have this meeting ongoing in Geneva, and we're expecting news could hit really from now or in the next hour until early afternoons. But most of the time we do have like bit of an advanced warning by attendees coming out of the meeting or going into the meeting, telling us how they are going to vote, what they are expected to talk about, and how they are leading. But anyway, it's going to be a driver today for oil. Okay, the U.S. market, the biggest market, not being in, it may be. I have to wait until tomorrow, but as I said, when the market is off, especially the biggest market, it can either be more volatile than really quiet. So keep a very close eye on what's happening in oil. So we are turning around a bit above now. We are at $89. We are turning around this 88 zone, which has been really a big traffic island of late. We did go down to prior highs from October 2021. We nearly went down there. It's a bit of a trend line here. So I think the next big level there is going to be in the low 85s. If ever they don't do anything and the market judges that demand for now is not big enough, so they can try to drive it a bit lower. If in turn they decide to go ahead for a small cut because the main participants are eager to bring the price back up, keep an eye on 91 and above there, 95 and a half, 96. So there's $5 in between. I'd say the first level is 91, and then keep an eye on what's happening around 96. So be mindful that this OPEC meeting is going on in a market where the US is, in theory, not around. I'm saying in theory because I know from my banking days that even when a market is closed, some of the banks are still in the market, and their traders will be somewhere not far from their desks, if not their phones. On Brent, and that's more interesting for the NOK, we're came to lean here on a pretty decent support, in my opinion, just below 92, and now we're already $4 higher again. But if ever we come to retest down there, watch this 91, call it 91 3/4, 92 zone on Brent, and it's going to be important for what's happening in the Norwegian kroner. It's one of the drivers of the NOK, of course. And as we can see, actually, today, despite the Norges Bank Norwegian kroner sales, dollar NOK is trading lower, euro NOK is trading quite a bit lower, and that's mainly thanks to the rebound in Brent. It will be correlated and indirectly driven as well by what's happening on the OPEC Plus side of things. While I'm on that, look at the gold and silver, putting in a bit of a bounce. We couldn't get down there yet. I think it all has to do with even though the short end remains very big still, It might have to do with the markets in the States coming back a little bit during the Asian and early morning time in Europe. So we're seeing a little bit of a bounce. We still have to clear this 23, 28 zone that I've been pointing at in gold, which is a bit of a pivot zone in the short run, in my opinion. We have to get back above to really get going and see a retest of 1770s. Silver, quite a flush last week. Accelerated with the break sub 18 and the break sub the prior 1813 lows. It went all the way down on going to put like, probably you won't see as many indicators, but just to show where we went down to mid 17s, 1750s. But today we are trying to put in a bit of a bounce. I also think it's due to those yields, but as I've been saying, things can always look the most often at the bottom, and this flush could, I'm not saying it will, but could be enough for now if we start to hold 18s, this trend line coming in. This is the one. If we start to hold 18s, it could be enough. If not, if we start to see yields creep back up starting tomorrow, and together with less sexy economic data, there may be this last flush leading to 17 or just below $17. But I think it just might be enough, just for the time being, at least. Moving over to other stuff, I'm going to leave the euro dollar for what it is. We've already talked enough about the 99. Euro sterling. I think it's relatively important going into the ECB week to keep an eye on the euro sterling, because we have a double driver here this week with the appointment of the new prime minister and the appointment of the new prime minister and the ECB, obviously. So this is, we had this little break above the prior highs. We've had a similar situation back in July. Okay, this one was I don't exactly recall what it was in June when we had that big spike. Must have been a euro recovery or so. But we are rejecting it again, and I think it could be relatively interesting, this rejection. As a matter of fact, I don't have anything running in the cash, but I did buy some downside on Friday, thinking it may be enough here, and then see if we can get back down to 85, 90, 86, the figure perhaps ahead of the ECB. Or even lower in case ECB signals something funny when over their meeting. So I'm looking for a bit of retracement in this. If we really get full whack retracement mode, why not get down to this 85, 10, 25 zone again? But we'll have to see what happens as the weekend folds. Back above here would be pretty much saying that this can go back up into to the big 87 test, that the 87 level that Ryan already mentioned a fair number of times. On the other ones, as I was saying earlier on the show, as if when in doubt about what's happening on the dollar, maybe the crosses are a little better. I'm not going to say easier, but a little better to trade or easier to monitor. And EuroCAD is one of them. We saw this retracement back into the month end violence, I must say, after the fact, because it was a really strong move that we saw at the end of the month when people needed to buy euros. But we can see here there's a bit of a gap here and a bit of a potential head and shoulder activity going on here as well. in this area. If we start to cap again, you always have to give it a bit of leeway. But if EuroCAD starts to cap here at the start of the week, there's probably a potential we are going to get a move lower again. But leaving this potential head and shoulder out, I still think it's globally oriented to the way down for now, especially with the weight of hanging around the euro's neck. And although it's a slow process, don't forget that Canada is delivering energy to Europe now as well. So together with Norway, it's a beneficiary of what's happening in Euroland when they have to look at for their energy outside of Russia. So I'm still overall pretty bearish on this one for potential retest of those lower levels later on. Quick look on the Euro Aussie is kind of similar, but the Aussie is a bit perhaps more dangerous compared to Canadian dollar, because we don't know what or how much CNH could impact the Australian dollar. We do see a bit of a revival of the commodities. So this is helping this Euro Aussie back down. 147.40. Keep an eye on that one. It's starting to really get rejected all the time. We are 1% lower. I acknowledge that, but if ever we see a euro rebound, keep an eye on this one in case it's getting rejected again. Quick look on the. I'm going to pass the dollar Canada because I've got absolutely no clue what's going on the dollar Canada, and since they are like such a close neighbors, I think Canada and US dollar are pretty much in the same boat for what's going on the macro side right now. So I'm leaving the dollar Canada for what it is. Aussie dollar, as I said last week over it might have been here or on face. I think this 67.60 is a bit of an interesting one. Depending on what's happening over RBA and what's happening on the US dollar side, keep an eye on this 67.60. If we start to hold there, why not get a test back of 670 the figure at some stage? But for that, of course, we will have to get back above 68.30 first of all. On the downside, in turn, if we break here, the prior lows around 66.75, 67, the figure will be in danger again. So that's to start the week. And then a quick look at what's happening on the NOK, and I think the most important one is the dollar NOK for the time being. Euro NOK, I've got a little bit of a problem with Euro NOK right now, because I'd say it could be beat on divs, but with what's happening in Euroland, I'm not sure I want to get too deeply involved in Euro NOK as such. We've been talking about these levels already quite often, so I think the level of no return right here and now is around 980, 983. As long as we're above, and especially as long as we're above this 990, it looks to me like we have a bit of room to trade this one higher. But let's see how the weekend falls when the US returns tomorrow. Last little look on how my euro mix is evolving. People in the room know that I've been selling it back out last week or even the week before. On the what I thought could be a false break of 99 to just start the week, I covered it the short this morning here, and I'm waiting to see if we can make it back up to anywhere close to 20 the figure to start to reload the shorts, and then perhaps quick look at this one, the S&P. Yeah, it's been testing the 3900. People talk a lot about the 3900. To me, the real test should be just below 38.90. I reckon that's valid as well, and perhaps even 38.75. But looking at the yields, it's probably going to follow yields pretty closely. So personally, I'm going to wait until tomorrow to see if we get a retest, hold. Then that might signal a bit of a bounce, in my opinion. If we start to close below this 38.90, 3900, it looks a bit fragile. We could do another 100 points lower. And that's enough for me on a Monday, Ryan. Ryan?
Yeah, mate, I'll grab that back. Okay? I hope everyone can see the screen now. Yeah, I just want to add a quick thought just to the overview of central banks right now, and I've been saying it for a few days and last week on Face and whatever. It's really all about how high rates can go now. It's not about so much what the increments are, 25s, 50s, 75s. It's where rates are going to top out potentially, or at the very least pause. That's what the market's going to be trading now. And we've got that, we've heard that from the RBNZ, maybe a couple more hikes and then they go on pause. It's possible we hear the same from the RBA. We've also got the Bank of Canada as well, as mentioned. And I just want to highlight this from the last policy meeting, which was back in July at the Bank of Canada. So no, a fair few weeks. So we could get a lot of new chatter as they've assessed the data since then. So they say the rates will need to rise further from their 2 to 3% range. We are expecting a 75 pip hike from the Bank of Canada to 3.25%. So that will just put them above their expected range there. And they admit they are front loading rate increases to avoid the need for higher interest rates down the road. So really the 75 pip from the Bank of Canada here, I think there's probably a greater chance that they signal they're going to ease off the gas at this meeting. Now, as you can see, dollar CAD doesn't exactly look like it's trading a central bank tightening by 75 pips. So if we're starting to see central banks get into their short-term or whatever terminal rate and easing off, and we've still got a Fed who's going full tilt, the divergence is going to continue opening and the dollar is going to remain well supported and US yields are going to remain well supported moving forward. So that could by nature mean further gains for the dollar. It could mean dollar CAD finally breaks out of this range. We get above 132 and power on up. Aussie dollar, for example, could continue to head lower. This may not be the bottom down here. And the same for other pairs. Now, versus the euro, the ECB are just basically starting their hike path. So we need to know a bit more about how high they may want to go before they ease off, and then match that off with where the Fed's at. But for some of these smaller central banks, they're not going to be hiking to 6%, 7%, or maybe going as high as the Fed. They're going to be far more cautious. So look for that reaction in those currencies, particularly versus the dollar, because it's going to keep the divergence or the policy gap wide between those countries. So even if you think that we know what the Fed's doing and it's all priced, the other side of the coin, the other currencies may have some influence in that going forward. But these items will be revealed as we get these central bank decisions and we get to know exactly what they are doing. But we can start to plan for what they may do if they all start following the same path. And on that note, we shall call it a day for today. I would like to thank you all for coming to the Flow Show, to Stel and Kay for their input. It's going to be a busy week, I think, so get yourselves ready, do your chart analysis, know where your levels are, and let's rock and roll this week, and we wish you many pips. See you tomorrow.
Thanks, Ryan. Have a great week, everybody.